What is the right kind of life insurance? As an insurance agent, I get this question all the time, and the answer is it depends. Let's explore various types of life insurance. All policies are not the same. Some give coverage for your lifetime, and others cover you for a specific number of years. Some build up a cash value, and others do not. Some policies combine different kind of insurance, and others let you change from one kind of insurance to another. Some policies may offer other benefits while you are still living. Your choice should be based on your needs and what you can afford. If you're buying life insurance, keep in mind that there are two basic types of life insurance: term insurance and cash value insurance. Term insurance generally has lower premiums in the early years, but does not build up a cash value that you can use in the future. You may combine cash value life insurance with term insurance for the period of your greatest need for life insurance to replace income. The term insurance covers you for a term of 1, 5, 10, 15, 20, 30 years, and so on. It pays a death benefit only if you die in that term. Term insurance generally offers the largest insurance protection for your premium dollar, and it generally does not build up a cash value. You can renew most term insurance policies for one or more terms, even if your health has changed. And remember, each time you renew the policy for a new term, premiums may be higher. So it makes sense to get a term that has, let's say, 20 or 30 years old. That would bring you the best value for your money. Ask what the premiums will be if you continue to renew the policy in case your term has ended. Also, ask the agent or ask the insurance company if you will lose the right to renew the policy at some age. For a higher premium, some companies will give you the right to keep the policy in force for a guaranteed period at the same price each year. At the end of that time, you may need to pass a physical examination to continue coverage, and premiums obviously may increase. You may be able to trade many term insurance policies for a cash value policy during a conversion period. If you are not in good health, premiums for the new policies will be higher than you have been paying for the term insurance. And let's move on to the cash value life insurance. It is a type of insurance where the premiums charged are higher at the beginning than they would be for the same amount of the term insurance. The part of the premium that is not used for the cost of insurance is invested by the company and builds up a cash value that may be used in a variety of ways. You may borrow against a policy cash value by taking a policy loan. If you don't pay back the loan and the interest on it, the amount you owe, will be subtracted from the benefits when you die, or from the cash value if you stop paying premiums and take out the remaining cash value. You can also use your cash value to keep insurance protection for a limited time, or to buy a reduced amount without having to pay more premiums. You also can use the cash value to increase your income in retirement, or to help pay for needs such as child's tuition, without canceling the policy. Those would be the college fund, in other words. However, to build up this cash value, you must pay higher premiums in the early years of the policy. And cash value life insurance may be one of several types, which is whole life, universal life, and variable life, are all types of cash value insurance. And let's go ahead and explore each and every one, because usually those get confused a lot, and I really want to go one by one and explain what they mean. Whole life insurance covers you for as long as you live if your premiums are paid. You generally pay the same amount in premiums for as long as you live. When you first take out the policy, premiums can be several times higher than you would pay initially for the same amount of term insurance, but they are smaller than the premiums you would eventually pay if you were to keep renewing a term policy until your later years. Some whole life policies let you pay premiums for a shorter period, such as 20 years or until age 65, for example. Premiums for these policies are higher since the premium payments are made during a shorter period of time. Next is universal life insurance, and let's explore this kind of it's a flexible policy that lets you vary your premium payments. You can also adjust the face amount of your coverage. Increases may require proof that you qualify for the new death benefit. The premiums you pay, which is generally less expensive, the charges, go into a policy account that earns interest. Charges are deducted from the account. If your early premium payment plus the interest your account earns is less than the charges, your account value will become lower. If it keeps dropping, eventually your coverage will end. To prevent that, you may need to start making premium payments or increase your premium payments or lower your death benefit. Even if there is enough in your account to pay the premiums, continuing to pay premiums yourself means that you build up more cash value. And that also means that you have cash flow. If you have cash flow, this might be a good type of insurance for you. Next is variable life insurance. It is a kind of insurance where the death benefits and cash values depend on the investment performance of one or more separate accounts, which may be invested in mutual funds or other investments allowed under the policy. And be sure to get the prospectus from the company when buying this kind of policy and study it very, very carefully. Again, because this is a variable life insurance. And you will have higher death benefit and cash value if the underlying investments do well. Your benefits and cash value will be lower or may even disappear if the investments you choose didn't do as well as you expected. You may pay an extra premium for a guaranteed death benefit. Again, be very careful with this type of life insurance. If you're shopping for life insurance, there are other factors to consider. Please watch our videos on this topic. Also, we will gladly provide a comparison code to you and help you determine how much life insurance you need. And that's a whole new topic, so please feel free to watch our video on that topic. We are a licensed insurance agency and have contracts with major insurance companies in California, thus can find a policy that fits your needs at a lowest premium possible. As always, thank you for watching our videos. For those that are subscribed, we want to thank you for your loyalty. If you found this video useful, please feel free to share it. We will gladly appreciate that. Thanks a lot.